Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now that being said, in today's episode we've got the latest Bitcoin news, we've got some Cardano, Polkadot, Chainlink, our usual 404 Logic Not Found segment, and more, so make sure you stick around for the whole episode. But before we get into all of that, let's kick it off with questions from you, the amazing folks who watch my channel. So I'm going to pull those up here on the computer now. But if you want one of your questions answered, leave them in the comments down below or tweet me at Hashoshi4. I'm fairly active on Twitter. And if you would be so inclined, please do subscribe to the channel, hit the bell notification button so that you can get a heads up whenever I post new content here on the channel. Thank you in advance for that, and let's dive into these questions. Now, the first question is from Raspi or Raspy. I'm not sure how to pronounce this name exactly, but this person is one of many who's been asking me recently to create a Discord channel or to create a Discord server for folks who watch the channel, basically to create an online community for those who watch the Hashoshi channel. So it is done. Ask and thou shalt receive. I've left a link down below in the description for anyone who wants to join the Discord server. It'll be a place where you can ask questions for Crypto Over Coffee. You can discuss your favorite altcoin projects. You can discuss pricing and all sorts of things on this Discord channel. You can also recommend content, and I will pick content from the list of different suggestions that come in on this Discord server, and I'll look for ones that get voted up quite a bit by the community and see what has the most interest, and I'll try and start integrating more and more content that folks recommend from that Discord server. So again, if you want to join, please do join, and please share the link around with folks that you know that might also watch this channel, because I know that there are going to be imposter channels that come up. There are going to be people pretending to be me. You see it all over the comments down below. There are fake Hashoshis leaving WhatsApp contact numbers and all sorts of stuff. They're fake. They're scammers. Please ignore them, report them, remove them from the channel, and just tweet me, let me know that you're seeing it, and I'll get rid of them. They're really hard to beat. That being said, I want to make sure this Discord server is something that people know. There's only one official Hashoshi Discord server, and it's going to be the one that's linked down below. And I'll also pin it in a tweet on my Twitter so people can be sure that they're using the correct one. So, Raspi, we have a Discord server. Thank you very much for your question. I guess it's a question. All right, second question of the day is from Coinoclast. It is interesting news about ADA. So this was about last week's delegation K parameter change. Who decides on the K parameter? Now, for those who didn't watch last week, of course, it will be linked down in the description below if you want to watch last week's episode after this one. But the K parameter in the Cardano staking ecosystem basically helps to determine what the saturation rate or saturation level is for a given stake pool, and saturation in terms of ADA that is delegated to that stake pool. And so when a K parameter change happens, usually what that does is it means that larger pools with larger delegation saturation start to pay out less rewards because they're oversaturated. So it changes that saturation level. Now, right now, this K parameter is controlled by IOHK, and IOHK being the main sort of team behind the Cardano protocol. Before everyone freaks out and says, oh, it's centralized, it is, and it's done so purposefully. Right now, the K parameter is being used to, in a very calculated and crafty way, push the network towards decentralization, when eventually that K parameter can then be given as a metric to be controlled by the community by way of governance voting on chain. So it'll be a community voted parameter relatively soon. We'll talk about that in a second. Now, there's another parameter called D in Cardano, and that's basically a measure of how decentralized the network is. When Shelley staking and incentives first came out, so this whole proof of stake environment, the D parameter was set to 1. And over time, it's slowly reducing down to 0. When D hits 0, that means that the network is adequately decentralized to pass off some of these critical network functions like voting on the K parameter over to the community. So right now, on current trajectory with the recent K parameter change, which is very much targeted to push towards a lower D value because it makes you want to create small pools, and you want to then delegate to small pools to give you more rewards. I digress. D looks like it'll hit 0 by March of 2021, April of 2021. So we're getting really close to that time period. So I wouldn't worry too much about it. But right now, K is determined by IOHK. Hopefully that answers your question. Next question is from Thomas Nichols. Hey, new sub here. Thank you very much for subscribing. Do you think that proof of work will be phased out completely for proof of stake at some point soon in the future? All right, this is an interesting question. The short answer is no. I don't think proof of work is going to go away altogether. I think it's going to be used maybe not as the primary consensus driving algorithm or mechanism in networks in the future, but I think it's going to be a critical component of it. So a lot of networks that do proof of stake still use proof of work for a lot of things. For example, Zilliqa, who doesn't use proof of stake, they actually use practical Byzantine fault tolerance. They use proof of work to sort of prevent denial of service attacks. So when you want to create a new node on the network and join a network shard on Zilliqa, you have to complete a proof of work puzzle basically to create sunk cost for you, right? That prevents the ability for someone without any cost to just create 500 nodes on the network and then overwhelm the network and take over a dishonest majority. The same thing goes for oracles like Teller, right? Teller uses proof of work for very much the same thing. It uses it as sort of a sunk cost driver to prevent Sybil attacks, to prevent denial of service attacks. And Sybil attacks basically being when a network participant sort of circumvents the reputation system to take over the network or to at least wreak havoc on the network. So I think that proof of stake is going to exist in more and more and more networks, and you're seeing it right now. Most of the challengers for Ethereum, the Cardanos, the Elrons, the Algorands, etc., they all are using proof of stake in some form or fashion and flavor. And there's a reason for that, because it's very efficient. Ethereum is moving there. It's very efficient. It does what it's supposed to do. It isn't perfect, and it's really hard to do correctly. I mean, I'm only one guy. It's really hard to do in a way that's statistically sound, but proof of work is not going to go away altogether, because there are networks like Bitcoin that need proof of work to be what they are. Bitcoin's core tenet is proof of work. What gives Bitcoin a lot of value in a lot of ways is proof of work. The effort that it takes to create new supply, the effort that it takes and the collective cost of running the network is what makes Bitcoin so secure. And those are core things that won't change. So now my now long answer being made short, no, proof of stake will not phase out POW altogether, but it will be one that sort of moves into the forefront ahead of proof of work in most networks, with a few stragglers still existing using proof of work for everything. So hopefully that answers your question. Thank you very much, Thomas. Ismail asks, what if I have less than 32 Ether locked in DeFi? Will it migrate automatically to ETH 2.0 in the future? And will there be any price difference if I don't deposit 32 ETH to ETH 2.0? So there's a lot here, and I don't know if I can answer everything exactly, but if you have less than 32 Ether in general, let's just say it's not locked in DeFi, you have it, and you want to maybe stake it, right? You want to participate in the network. You can go to a custodial service like Kraken, and you can stake your Ether for, I think they say 5 to 17%. So that's low end to top end. There's no guarantee where you're going to fall. Less than 32 ETH or 32 ETH or more, you can stake with someone like Kraken. And it's a centralized service, it's custodial, and it's also a one-way trip. You can't stake your Ether on Kraken and then change your mind and take it out later. It's a one-way trip. It moves over to Ethereum 2.0, quote unquote, and then you're done. And you start earning rewards. And then you will eventually be able to use that Ether again once phase 1.5 of Ethereum 2.0, probably end of the year next year, comes live, and you can start to actually move it around and use it a little bit. In terms of migrating automatically to ETH 2.0, if you're on the Ethereum network now, you didn't join as a 32 ETH validator in the deposit contract, and you're not putting it in something like Kraken to stake now after the fact, here's what's going to happen. As the network for Ethereum 2.0, moves into the process of integrating sharding, right? That's the sharding mechanism to help the network scale. When that happens, eventually the current Ethereum proof of work network that we're all using today is going to become a network shard in Ethereum 2.0, which basically means that all the Ether, all the apps and dApps and things that you have on the Ethereum proof of work chain will be migratable to Ethereum 2.0. And so what that means is there won't be necessarily a price difference between your ETH 2.0 ETH and your Ethereum proof of work ETH, because I think the goal is to make them always convertible one-to-one to each other to make them fungible. I think that's the idea. It might end up that it doesn't work out that way, but that's just how I think that it's going to work. Now, if you have Ethereum locked in DeFi now and you have no interest in staking, don't bother. You will eventually be able to move your Ether over to Ethereum 2.0 and do your thing. So I think that should give everyone a general idea, but this is in flux and it's probably going to change over time. So maybe we'll readdress this later on. Thank you for your question. Last question of the day is from Popescu Claudio. Again, I'm sorry if I butchered your name. I feel I always do that. What's your input on the smart contract wallets like Argent? Would smart contract wallets be able to really compete with hardware wallets? Less physical components to be faulty, less trouble with recovery process. So I'm actually an avid user of Argent. I think Argent is great because it gives you access natively to DeFi, to all sorts of things on the Ethereum network. Basically everything that the Ethereum network can do, Argent has taken advantage of to put that in the user's hands. All of the people who say it's a substitute for cold storage, though, a substitute for a hardware wallet, are mistaken. The way that I feel is that Argent is a great place to go for your day-to-day use, right? You can use Argent as your wallet, right? You have a wallet in the old days, right? You've got your credit cards, you've got your ID, you've got your cash. That wallet, even though it's not your life savings, has a ton of value to you because it has your personal data, it's got cash, it's got value, it's got credit cards that you can then use to spend your other assets. I look at Argent the same way. You might not have all your Ether there, but you've got personal information, you've got a key that could be used to do some other things. Maybe that key in Argent is part of a multi-sig scheme somewhere else, right? You don't want to lose the Argent wallet, but if you do, it's not the end of the world, right? It's not the end of the world because it's not everything you've got. You should still have the majority of your sort of static funds, the funds you don't use, the stuff you're holding long-term, the stuff that you're holding for more than a couple weeks in a hardware wallet, and then use Argent or like a smart contract wallet like it, that's very convenient, very easy to use to do your day-to-day stuff. That's my personal opinion. I don't think software wallets are going to usurp hardware wallets in the next 3 to 5 years. Maybe one day they will with adequate technological advancements, but the hardware level security is still very important. So thank you very much for your question, and let's dive into the news. Now, for those of you who are new here, every week in partnership with the folks at Cobo, who make the awesome Cobo Vault wallet, you might have heard of it, I will be giving away a Cobo Tablet steel seed phrase backup device in every single episode from here on out. So all you have to do to enter this random draw is to comment on the video down below, and then I pick a random winner each week. So just for transparency, the product is only available in the US, Canada, and EU. So if you win and you're from other regions, I'll just send you some Bitcoin instead. Now, the winner of last week's random draw for the Cobo is here on the screen. So a big congratulations to you. And of course, I will be in touch to tell you how to claim your prize. Now, as we do on the show every week, let's kick it off with some Bitcoin updates, some price analysis and interesting Bitcoin news, that kind of thing. Now, this week was more of the same good vibes in the Bitcoin world that we've been seeing for a while, with prices sticking to the 18 to 19K range. But early on, there were some celebrations going because exchanges, some places around the world, were reporting prices over 20K, which was many people's 2017 all-time high, depending on who you ask. Now, honestly, what a time it is to be alive. We're sitting here where Bitcoin, one single Bitcoin can buy you a brand new Volkswagen Jetta, and people can't even agree on what the all-time price high was. So that being said, the celebrations were quelled a little bit later in the week as news started coming out of Congress in the US about new regulations proposed by lawmakers that would severely clamp down on stablecoins that are very important to the crypto world, including to Bitcoin. Then after that, there were rumors about legislation coming that would impose backbreaking regulations on self-hosted crypto wallets. And these regulations were brought to light as rumors by Coinbase CEO Brian Armstrong, most notably. Of course, these are rumors. Now, this caused quite a stir, and I'm sure that there was some panic selling around the world as a result of this news. But then, later in the week, the plot thickened again because the new head of the Office of the Comptroller of Currency, Brian Brooks, clarified that regulators are intent on, quote, getting this right, and confirmed with no gray area that, quote, again, nobody is going to ban Bitcoin. Nobody's going to ban some of these transmission technologies. Now, this doesn't guarantee that whatever regulations are coming are not going to stifle innovation or cause a stir or be bad. They still very well might be. But this is not the doom and gloom situation that I think was starting to grip the community before there was clarification about what these regulations would realistically include. Now, what does this mean for Bitcoin? To be honest with you, it remains to be seen what this means in depth. But I have a feeling that what will happen is there will be more targeted and codified rules that might hurt derivative exchanges like BitMEX, for example, and subsequently will put a dent in Bitcoin in the process, but that would of course be temporary as things adjust. Now, I have to say, institutions right now are buying up Bitcoin like a 90s kid with a big allowance bought Pokemon cards. And for those who are uncultured, that's a lot of Bitcoin that's being purchased. I'm so positive about the situation right now, more than I ever have been in probably the last 3 or 4 years, about next year's potential for Bitcoin. So be smart. It goes both ways. Don't panic sell, but also don't FOMO in too deeply and make bad decisions. But I'm extremely positive right now. In other news, some big news out of the Polkadot camp came this week about a new DeFi alliance, or decentralized finance alliance, that the team behind the ambitious interoperability network are facilitating. Now, this DeFi alliance in the Polkadot ecosystem will help drive DeFi product development, research, and then discussion with the community. And it features some really notable members like Moonbeam, Plasm Network, Tidal Finance, and Chainlink. Yes, Chainlink. The popular Oracle network is playing heavily into the Polkadot world, and I reported on this a while ago. And they'll surely be the go-to price feed Oracle for the many DeFi projects that will go live on the Polkadot network over time. So that's really good news for the Chainlink folks as well. The Chainlink team actually had this to say about joining the alliance, and I quote, Chainlink is excited to help steer the direction of Polkadot's growing ecosystem of decentralized financial applications. By promoting developer best practices for DeFi protocols, the Polkadot ecosystem can become stronger than ever. I personally am really excited to see what happens with this alliance because I think that Polkadot really does have potential to be a huge disruptor in the DeFi world because of its parachain interoperability architecture. It allows each DeFi project to have its own specialized blockchain for its operations to be optimized and buttery smooth for end users. But also announced around this time is that Polkadot is working to expand its fairly small set of validators. I think it's in the hundreds right now, or the 200s right now. And they're trying to increase those validators by a magnitude of 1,000. So with a priority being on individual and independent validators. So small validators that want to add 1,000 more to the network. So decentralization is in the forefront of updates going forward. And there's lots of really cool stuff coming out of the recent Polkadot Decoded event. So make sure you check that out online. Quick coffee break. Now, if we stay in the Polkadot world for just a second, I want to give a quick shout out to Gavin Wood, the mastermind behind the Polkadot network. Now, Gavin was involved in the early days of Ethereum and took a lot of lessons learned from that experience. But recently in an interview, Wood had this to say about the constant comparisons between Polkadot and Ethereum on Laura Shin's awesome podcast. And I quote, Polkadot does not have to be an Ethereum killer to succeed. Let that sink in for a second. Ethereum is not really a competitor, right? Simple and powerful. This is how every single leader in the entire space should be speaking about their project, in my humble opinion. This is what it sounds like to be building for the betterment of tech and for the industry, and building something you like, not just for plaudits and money. He went on to say later that Polkadot is in many ways a, quote, bet against blockchain maximalism, where there's one chain to rule them all, because Polkadot is a connective layer to let the world use many different blockchains natively. Now, honestly, if I could print this on a t-shirt and wear it every day, I would. I resonate so deeply with this way of thinking that you don't have to compete with everyone and destroy everyone to succeed. I think the future will be one with many blockchains that all specialize in different things, and they will all be connected using interoperability meshwork protocols like Polkadot. Well done, Gavin. Thank you for saying this stuff. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm, please do hit that like button and get subscribed. It tells the YouTube robots that you're liking what you're watching and that other people might want to watch it as well. So thank you for that in advance. Now, for today's absence of logic, I bring you something I like to call Delusory Victory Syndrome, which is something that, yes, I made up. Now, someone suffering from Delusory Victory Syndrome is someone who has been consumed by what was once a mild case of confirmation bias, often caught initially by drinking the Kool-Aid for their favorite crypto project, and has now spiraled into an alternate reality where their cryptocurrency of choice has already achieved worldwide domination. Now, I'm not singling out any one project here because every single one has these types of diehard fans who suffer from Delusory Victory Syndrome. You probably see it every day on Twitter or on YouTube where someone pontificates constantly about how their favorite cryptocurrency project is in fact so well developed, so superior technologically, and so unjustly undervalued that all other projects should just bow down and quit rather than to try and compete with this godlike protocol. Now, if that were the case in reality, it would be so clear, would it not? The adoption would be there, the users would be there, the money would be there, but it isn't. So what does that mean for these people? It means that all of these projects need work. They have progress that they have to make. It's going to require a team that is rooted in reality about how they're actually doing in the market to make that progress happen. So those who suffer from Delusory Victory Syndrome believe their project has already won everything. They believe that the work is already done. It's just a matter of everyone else waking up and suddenly piling in on what they've known all along is the best. Now, sadly, there is no current treatment for Delusory Victory Syndrome, but please hit the subscribe button to be the first to know about successful trials that are ongoing in FDA testing right now. I mean, this probably all sounds satirical because it is. I'm making light of this made-up illness, but it is a serious issue in our industry. There are people who so vehemently believe that their favorite project just cannot be stopped, that it is perfect, but it's driven by emotional ties to a heavy investment or even a dogmatic but respectful loyalty to something that they believe in. And I do give kudos for that loyalty. But what is unhealthy is that it drives people to make bad decisions, bad financial decisions, bad emotional decisions, whatever. They ride the project down to the gutter, or worse, they bring others into a sinking ship based on delusions of grandeur or false promises. Now, there comes a time when these projects who are full of potential and promise have to deliver. They have to show that they can get users to download that wallet, use those dApps that the many developers they've hopefully drawn in have been building, and drive adoption. That is when a protocol can say we've started to win. That's what has to happen. Don't get caught in the trap of Delusory Victory Syndrome. Realize that this industry is not forgiving. Most projects will fail. Just like startups, the odds are the same, if not worse. Most startups don't succeed. Now, you haven't won until you've won. And even then, you have to work really hard to keep on winning. So 404, logic not found. In other news, the popular DeFi protocol Aave, who originally garnered hefty investment and interest with the launch of their groundbreaking Flash Loans product, just launched their official version 2 protocol, which has one massive feature that I think bodes really well for DeFi users. And that new feature in version 2 of the Aave protocol is the ability for users participating in DeFi programs that require locked cryptocurrency as collateral to continue to trade those assets freely as if they were not locked at all. Now, this is going to open up all sorts of creative opportunities for profit, and of course, plenty of loss opportunities as well, because that's just the joy of DeFi, is it not? Aave themselves talked about how this feature, though, could be used for avoiding liquidation by moving funds that are in an asset that's locked as collateral over to a stable coin to preserve value if it begins to trend downwards. It'll protect you from liquidation in certain instances. So pretty wild stuff here. It almost sounds surreal, like Flash loans did when they first launched. People are thinking, how can this possibly happen, and how is this protocol making money at all? So let's just see how this one develops, and I'll try and put together an explanation of how it works. Now, I do also want to draw some attention to a really promising and fast-growing NFT-based game, Gods Unchained, and I've been really enjoying playing it lately. Gods Unchained is a free-to-play online game that's currently in beta right now, and each playable card in the game is backed by a blockchain-based asset, so users can truly own their in-game items and trade them like physical items or trading cards in a free market. I've been talking about this NFT world for a while. I'm super passionate about it. So this mechanism of ownership opens up all types of cool use cases outside of P2P trading. For example, a user who owns a rare and valuable card or in-game item in Gods Unchained could use that asset as collateral for DeFi products. I mean, at face value, the game itself is just genuinely fun to play casually, and if you get particularly good at it by chance, or you amass a collection of really capable in-game assets, you might just be able to compete handily in a $500,000 prize tournament that the team behind the game has committed to holding in the future. No confirmation as to when that's going to happen, at least that I know of, but it's going to happen. So check it out if you haven't already. I'll leave a link to Gods Unchained down below. Really excited to see more NFT gaming coming into the world, and Gods Unchained is a great example of how to build a great game on top of blockchain. Now, some rumors are now swirling around Spotify, the massive music and podcast streaming giant, who is indisputably better than Apple Music, I might add. Hot take. But anyways, Spotify is starting to explore cryptocurrency and central bank digital currencies, etc. Now, a job posting seemed to point towards this fact, as it called for candidates with a crypto background to explore the use of blockchains, cryptocurrencies, and etc. for uses in Spotify. Now, I can think of a dozen ways for Spotify to use blockchain and crypto tech to better their service. How about using NFTs as a gamification reward program for users who stay engaged with their favorite artists, or hit cool user metrics on the platform and get a crypto collectible in return? How about allowing equitable micropayments of crypto to artists for streams in real time? How about allowing me to pay for my subscription to Spotify that I've been paying for like 8 years in Bitcoin instead? This list could go on and on. Now, this could be some pretty awesome news unfolding in the next few years, but it's not going to be clear what this all means. If anything, it's all just sort of unconfirmed reports based on a job posting, but it'll be a while before even those who get hired to Spotify really get buy-in, and then you have to build something, so it's going to take a while. But interesting nonetheless. Now, for fans of Cardano, some awesome news came this week about fundamental updates being made to the Cardano mainnet to clear a path for Goguen and use cases that Goguen will bring, which is the anticipated update bringing smart contracts and community-created token projects to the Cardano ecosystem. Now, the marquee update in this new sort of chain upgrade is the concept of a token lock, which presumably could be used to programmatically lock a portion of tokens on the Cardano network according to some conditions and prevent them from being moved or spent for a period of time. Now, this is a common thing that happens in DeFi applications where collateral is locked according to a set of rules. Now, my first guess is that this feature is a foundational one to some planned DeFi plays when Goguen does launch and smart contracts do come into the picture, but we'll just have to wait and find out. I think we're going to get Goguen coming really soon, so make sure you stay tuned for that. Now, folks, that's going to do it for Crypto Over Coffee for today. As always, I will link up a video here for you to watch if you want to stick around and hang out some more, but if not, thank you so much for watching. I really appreciate all the time that you spend watching the channel, and hope you have a fantastic and restful weekend and week ahead. And until next time, cheers.